Hey guys, welcome back. Hey, this video is dedicated to all you dreamers out there. Home buyers that are just dreaming for history to repeat itself again. I'm going to first off by saying, what's that five-letter word that we all hate, we all dread, and hopefully doesn't repeat itself again? COVID. Nothing good came out of COVID, right? Except for one thing. Interest rates. You right? Remember, there were historic lows in the 2s and the 3s. And I know a lot of you guys cashed in on that opportunity. You guys are now in the homes that you guys would have never dreamt of being in if it wasn't for those low rates. Now, a lot of you other guys managed to refinance your loans and now you're sitting pretty. Unfortunately, there's a lot more people out there that just couldn't pull the trigger during that time because of financial status or whatever things going on in their lives. And now there's a lot more people out there, like a lot of my buyers, that are waiting, the dreamers, they're waiting for rates to go back down. They still haven't pulled the trigger because they think that rates are still going to go down to the historic lows. I say, good luck with that. In fact, in the 4s, I don't think that's going to happen. Some economists say we might be in the upper 5s by the end of this year, but it's a guessing game, right? If they knew the real answer, they'd be billionaires, if they knew exactly where the rates are going to be. So that's the reason I decided to put this video together for a lot of you guys out there, all you dreamers out there that think that today's rates, we're at 6.85, you think that's too high, I'm going to wait. And I'm sure a lot of your brokers out there have told you, hey guys, buy it now and just refinance later when rates go down, later on in the future, hopefully. It should be going down in the future. When that's going to happen, I don't know, but at least you can refinance. You marry the property, but you take the rate. That's the reason I decided to put this video together, as I mentioned, because I did a little research, and I put together the 50, because I was curious, what's the 50-year average of the 30-year fixed rate mortgage interest rate? The answer, I think, is going to shock you. So if we're at 6.85 this week, what do you think? It's going to be higher or lower? I think it's going to put, really, like I said, things in perspective for you. So here it is. Now, here is the chart I put together for you guys. I got this one off Freddie Mac, okay? And again, 30-year fixed rate mortgage average, 1975 to 2025. So the heart of the disco era. For all you Seahawks fans out there, because we are a small business partner of the Seattle Seahawks, RSVP Real Estate, ERA. 1975 was the first year of the Seattle Seahawks, at least when they put things together. And that rate back then was 9.09. Then 1976, first year of the Seahawks, when they only had 2 wins, they sucked. Interest rates still sucked even more. They were 8.87. But things got worse, or suckier, as the time continued to advance. 1981 interest rate, the worst ever recorded, was at 16.63. That's the year average. But it was actually worse in the month of October. In 1981, it was 18.63. Now, if you don't think I'm telling you the truth, or Freddie Mac's telling you the truth, just go ask your parents or your grandparents. They're paying that much, or that high of an interest rate, which is 5 times higher than what we saw during the pandemic era. So that was a disgusting time. But the good thing is that things started going down. If you look at 1993, a whole point from 1993 to 1994, it did jump a whole point from 7.3 to 8.4. And then as you see, the trajectory continued to go down. It got lower and lower and lower. 2008, around this time right here, interest rates were in the mid-6s, but of course we had the big global economic meltdown, right? It was a terrible time for a lot of people. A lot of people lost a lot of money, and people like myself lost my home. The reason being is because I owned a condo in downtown Miami, and it was a brand new building, about 93 units. Well, a lot of people foreclosed or left the country and left their units behind. The rest of us have stayed behind in the building. It was about 37, 38 units. Well, the rest of us had to make up for the monthly HOA dues. So for that reason, we had to make up, only 37 of us, for the rest of the building. My HOA dues were higher, monthly dues were higher than my mortgage payment. So for that reason, unfortunately, I had to short sale my place, but c'est la vie. You just move on with life. Nothing I could do about it. Thankfully, it wasn't because I wasn't making payments or being irresponsible. It's just, that was the world during that time. But the good thing for everybody else, a lot of people that cashed in on some of the people that were short selling their units, they bought those units and interest rates continued to drop. Then when you look at the interest rates dropping to 2012 to 3.66, You see 2016, and that's when rates were at its lowest since 1971. The rate was about 3.65, which is super, super low. So everybody's all giddy. Everybody's happy. In 2019, it went up just a little bit more the year before. And then from 18 to 19, you saw the interest rates from 4.54 to just under 4% in 2019. So things are looking great. Then the pandemic hit us, right? And the pandemic, things were just terrible. And then during that time in July of 2020, rates hit its lowest ever recorded. It was just under 3%. Remember, we were talking at the top of the video. You all know, maybe you guys cashed in. It was about 2.8, 2.9%. So I'm happy for all you guys that managed to cash in on that. And so then we moved over to 2020, and that's when things got a little bit dicey around this time right here. Because rates towards the beginning of the year were just, the threes, then all of a sudden it shot up. By the time October came around, it was 7.08. Then came around 2023, things kind of dipped down to about 6.5 until, remember, December. I never forget that because I had some buyers that wanted to buy a house and they're all giddy. Next thing you know, rates shot up to just over 7%. That was terrible. And again, you might remember a lot of the so-called experts say everything's going to drop maybe to the fives. In 2023, we know that really never happened because we're in the mid sixes. Again, we're in the sevens, and then 2004, same thing. Just last year, things really didn't drop as a lot of people had predicted because we came in at an average of 6.7%. Today, in February of 2025, we're at 6.85, which again, historically, is really good. Okay, so here it is, guys. I came up with the 50-year average of all these interest rates, and the number is, remember, 6.85. What do you think? A little bit higher, a little bit lower? Here's your 50-year average. 7.83. A full point higher than today's rate. That's the average, 7.83. So again, guys, just look at the rate that we see today. As we said, guys, historically, the rate is great. Now, for a lot of you guys that got spoiled during that COVID era, guys, remember, if anything, 6.85, things will eventually, if you're going to hold on to the property a lot longer, then that is great. If you're going to sell in a year or two, well, who knows, right? But if you're going to hold on to your property a long time, rates will go down. Just refinance. Again, like I said at the top of the video, you marry the property, but you date the rate. And people say, the other thing, well, buyers will ask me, hey, Julian, when is the best time to buy a property? I don't know. But one of my favorite sayings in real estate is the best time to buy a property is always, always, always 5 years ago. Have a great day, everyone.